hello. Hi, everyone. How are you? And it's a little bit cloudy and rainy here in Des Moines, Iowa, but the rest of the country reports sunny and nice. So that just keeps me grounded. So I'm just here talking to you about employment tax audit. And before I start this, and I really want to kind of tell you my thought process, right? Every time I'm on here for an hour and I want to deliver something to you. So I want folks to think with me, and why are we having this employee and a contractor difference? So do we really understand why there is a difference? I know you say, of course I do. I know, because it's easier to pay someone as a contractor than paying payroll. It's just too much calculation, and I have to hire people to do that. So a lot of reason for that. However, and I want to give you the mathematical result and then walk you through the government regulations. And I hope that to get you understand the why from the number standpoint, and understand what is out there the government is checking on. And then with the knowledge you have, you'll make a sound decision for your small business. I will tell you that the most audited area in today's world is related to employee versus contractor. We call that reclassification or classification audit, right? All right, so let me drive you to the website that I pulled up, because I kind of want to go through this with you so you know what I'm looking at. This is our website, communitycpa.com website. On here, you actually can log into, if you are our client, you can log into your community portal right here, community portal. And you can log into your portal to do payroll. Community portal is the portal you read your files and you can pay your invoice. So up on the top, it is all for our client. Of course, the news is for our client, and you recognize that we're getting awards, and I am being recognized as an elite partner for CPA firms in 2021. And so all kind of things here. And my book is right here. And you can actually buy it from Amazon. And here is upcoming webinars. You can see what we have. So we try to forecast what we talk about every week. Then of course you can contact us, and this is our website. And here is the YouTube channel. I have to say that we're not good at marketing, because we really just depositing very useful, valuable videos here, but we don't have several million people and looking at it having fun. And this is really a place where you lost your smile and you come over here to look for knowledge. And we are in serious business, right? And I can be entertaining. Don't know, maybe I can put on the witch hat and then make you have fun, but that's just not the point. The point is that you come here spending your time and we talk real stuff. So you can see, we actually introduce things every time we talk on webinar, and it will be deposited in here. So if you miss out 3 o'clock, and don't worry, you have your other clock time. You can check out our webinar later, and Kat will help me to get our videos online within 24 hours. So if you miss right now, and you will have it. So it's right here. Make sure you're subscribed to our channel, because when you subscribe, and when we post a new one, even if you miss the online, the real life for a forecast, and you would still be getting a notification saying that, hey, Ying just did that. So then you can go in to check the videos. We do prepare our content. I want you to say, as much as you feel like it's just really pouring out of my brain and I don't do anything and I just got there, that's not true. And the Kat is also our librarian. She prepares me. She will quiz me, make sure I pass the test before I can come online to meet you. So we do some preparations here, folks, and making sure that our videos is of a value. And right here, you see, we did a webinar for small business grants. Okay, these are not government grants. They're not PPP. They're not RF. They're not ERC. They are private company wanting to help community small businesses come together with a bunch of funds in here. So we did that webinar, then we actually applied one. We used Community CPA to apply one. So really give you a sense of how you do it. It's not hard. It is not hard. I don't care how you feel it. Your feeling is off. You know, even if you feel like, well, piece of cake and I can just do it in sleep, that's off too. It is really requires work, some serious work, and it is something that only you but you can do that. Nobody else. So we try to tell you. So we invented this thing called do it with us instead of do it yourself, right? You of course doing it yourself, but you can do it with us first, and then you do it yourself. So with that said, and that is kind of our resources for you. And we want you to spread the word outside, tell your friend, family that there is a great website, YouTube channel, Community CPA. Go subscribe to it and be knowing what you're doing. And I will tell you that the business people, the difference between you today versus your parents before is that when your parents' time, business mostly coming from the family. So the dad is skillful, so send the skill to the son. So the family runs in the family. But with today's technology, with today's way of living, and business starts with people who are knowledgeable. And if you think Community CPA is doing great, do you know that me as the founder of Community CPA, I'm actually coming from Canada. I don't even know what IRS stands for at one time in my life, right? And I'm not even talking about, oh yeah, of course you don't know what IRS is when you were 3. No, when I was 3, I was in China. I don't even know how to spell ABCD. But when I'm teenager, when I'm young adult, I don't know IRS. I don't spell IRS because I don't know what that is. So let's just say that you learn. If you have the knowledge, and you will propel to the future with a better result. So I still say that come to a very serious website. And even if we have humor, sometimes it's dry one, it's not good, but I know that we're putting knowledge for you. Okay, that is the only promise I can have for you. Now, let's talk about this employment tax audit. And oh yeah, one other thing I want to mention, which is the no responsibility disclaimer. It is like a tattoo that need to be on the webinar. And I have to mention that, make sure that you use our content responsibly. And if you don't understand what we say, or you think what we said is not right, and be sure to check with your attorney, check with the CPA you trust, or check with us so we can explain that to you, right? But don't blindly just believe, oh yeah, this, I quote, this is where I got. You know, it doesn't work. When you go to tax court debating on your position, you quote from an internet source. No, that's not really the way to do it, right? So that is what we call the disclaimer of responsibility. So you are responsible for all the content you're taking from here. Now, let's say most common audit, folks, most common audit in the world, and this is the IRS website. You know, I'll tell you that if you ask me how many times I come to IRS website every day, I will tell you that I at least goes on IRS website once in a day. Literally every day I'm on the IRS website for different reasons, right? So when you check on information, go to responsible website. If I take a tax position from what IRS posted on their website, I can quote, because that's what they're saying, right? So today we're talking about the employment tax audit, which is IRS does that audit. And I brought you to this section because I want you to see IRS has a special session doing nothing but tell you that don't hire everybody as a contractor or employee. They may be contractor, they may be employee, but you got to have a good guidance. You must vet it through the system, know that is right before you classify Ying as your employee, right? So that is so important for small business. And I will show you on my, I prepared a slide. I'm going to show you what kind of damage you will have if you do not take care of that. So now let's just say the IRS website, this is the resources I have for you, and you can come over here to decide whether it is the person you want to hire is a contractor or is an employee. There's a form SS-8. You know what that form is for? That form is for you when you are not sure whether Ying should be your contractor or should be your employee. And you will fill out this form, have IRS to determine for you of that worker status. Isn't that cool? Right? So no ambiguity. And the IRS had tried really hard to make sure that there is no ambiguity. We're all doing the right thing. So IRS also made this very cute publication called the 1779. And this publication is actually using the color scheme, kind of like how Community CPA is. So I really felt, ooh, that is really good. I can use it. So you see on here, the IRS tells you those common trigger point that to determine whether you're an employee and contractor. So they're talking about behavior control, financial control, and the relationship of the parties. So just by quickly looking at so-called behavior control, it's like, you know, if you are an employer and employee relationship, and you control that person's behavior. You know when they come, you know when they go, and you tell them to use this tool, to not use that one. And you tell them that, oh, that work is done wrong. Let me help you. Let me train you. And then let me get the additional supply for you. So that is behavior control. So now what I just said makes so much sense, because if you have an employee, if you have a contractor, but you work with them day in, day out, you train the contractor and you provide the tools and you provide supplies to the contractor, you don't think you're having an employee? You have an employee, folks. Okay, so these are behavior control IRS is looking at. Financial control is the relationship between you and that person. So let's say if I am your contractor, but now IRS think that Ying should be your employee. So IRS will ask you that question. Did Ying put in any investment for this job? Oh yeah, Ying did. Ying bought a big computer and you know, in order to work. And so, you know, he did a lot of investment into this job, and he actually also set up a company for it. So Ying is actually set up her own company and start working with us. That suggests Ying and her company is your subcontractor, is your contractor, not your employee, right? So these are financial control that was separating whether you are an employee or you're a contractor. And the relationship of the parties, right? So employee benefit, are you offering benefit? So if I am a contractor to you, generally speaking, there's no benefit, right? But if I'm an employee to you, you may give me 401k, you know, pension plan, and give me PTO, things like that. Am I right? So this is IRS publication to teach us how to separate that. Then of course, every state has a similar things. I just want to quickly go through this with you. Look, in Iowa, I went to Iowa workforce. So I simply look for the determination, how they determine the workers and the contractors. So they, you know, they have a news release, and for this particular topic, there is a lot of talk about how to do that. They want to help the contractor to determine whether they are an independent contractor and a worker. And then look at this. In Minnesota, the Minnesota unemployment insurance area, they even come up with this common law factors, essential characteristic of employment, okay? The firm has the right to control the means and the manner in which the services are performed. The firm can require the worker to work at a specific time, may also specify the methodology used to complete the work. And look, that's the control, that's a behavior control. So the state would interpret what the federal has or add their own. And I mean, some states are very creative, right? And some states are very much going with what federal is, and some states are not the same. So I would say among Iowa, Minnesota, California, and you can go by sequence. Iowa is the one that always in compliance, always in accordance with what the federal government, so it's automatically approval of federal's regulation in terms of tax treatment. But Minnesota is not the same, and they like to add more things, and California is even far, just like east to west. California is a little separate government entities that they have their special rules. So now I did pull up California EDD, and in here they have this D38 guide to guide you what is the contractor, what is worker. So there's three things right here. I want you to read it. Do you instruct or supervise the person while he or she is working? If you answer yes, you're a big time employee. You know, you don't have a contractor. And can the worker quit or be discharged at any time? If you answer yes, you are a big time holding a employee, not a contractor. Okay, is the work being performed part of your regular business? Very, very important item in determination. So what they're asking is, if you are a CPA firm and you say, oh, Ying is a contractor because she is a CPA and she is, but she's special. So she's contractor. She's not an employee accountant. And then the question is Ying's work performed and it's part of your regular service? Of course it is. It's a CPA firm and Ying provides CPA service. Then can Ying be a subcontractor? No. That's what that means. So for example, in one of the DOL audit, Department of Labor audit, and the auditor was asking to give a list of people that they see in the restaurant, because they went in the restaurant and they took down everybody's name when they were in. So there was one guy and it does the janitorial service, so they took his name. And so but the restaurant owner has always been paying this particular janitorial guy on 1099 as a contractor, not an employee, because the reason the guy was caught right there when the DOL investigator came is because he came over to pick up his check. So he was in there. But he always worked after 12 when the restaurant closed. So he is not doing the same kind of work like the cook, the server, the waiter, right? He's not doing the same. He's doing cleaning. It's not the same, not a service that regularly the restaurant would provide. So his 1099 status was restated. Okay, fine. He can be a 1099 because you're a restaurant. You're not a janitorial service. So he is not an employee. He's a contractor. So see, that is the three. If you answer these three oh yeses, then that person is an employee, not subcontractor. Then of course, for Department of Labor wage and hour division, they're really the people to make sure that workers are paid with equity. Workers are paid. I lost my English. Can I speak Chinese for a change? So the workers are actually all paid properly. If they work overtime, it's time and a half. So those kind of regulation, right? They don't work extreme hours. They don't get deducted unreasonably. So that's a wage hour division. So when they come in, they will count how many people were here. So the hours they work, they interview the employee, says how many hours you work. But if they catch someone were not on payroll, but working there, and if you say, well, that person is 1099, they go into this classification issue. Like they are not your contractor, they're your employee. Therefore, the DOL could charge you for not paying that employee properly, right? So with that, and I am coming back to work on a whiteboard with you, because that is kind of things that we do very often to get our understanding to the T. So now you understand workers, subcontractors, they're not the same. So in any business, I hope you can read it. So Kat, can you confirm that my writing shows up properly and I did share my screen properly?
Yeah, it looks good, Ying.
All right. So every business, especially our small business, and if you hire people, obviously you are going to hire people and to do your business, whether that is you, yourself, or somebody else, right? This is self. This is yourself, and this is contractor, and this is employee. And I want to nail down a concept with you, which is what's the real difference between the three? You know, when I'm in business, and if I can just do everything with myself, I don't need contractor employee. Is that okay? Do I have to pay myself payroll? What a brilliant question, right? So I knew every small business has that question. Let me tell you, the answer to that is depends. Why depends? So I'm going to give you a chart right here. And if you are a sole proprietor or single member LLC, you don't have to run payroll, because whatever you have left over, like you're left over literally, maybe I'm just going to use a very simple example, right? Your leftover is 1,000. It's not like I think your leftover is only 1,000. I'm just using a very simple number for us to get to a good understanding. Okay, so 1,000. Your leftover is 1,000. That means your profit is 1,000. If you are sole proprietor or single member LLC, and remember you file Schedule C, am I right? So you file your tax return on 1040 and the Schedule C, and so your 10,000 would be charged with what? Social Security and Medicare. And this is called self-employment tax. Have you heard of that word? Oh, I have to pay a lot of self-employment tax. You got that? Okay. So what is self-employment tax? Let me give you the number. Okay. I don't think I need to explain the word of English, what that means, because your English is even better than me and you know what is self-employment tax, but you may not know the number meant related to that. So I'm going to write down these really strange number because I want you to just totally get it. Totally get it. These two are Social Security. Social Security, why is 6.2%? 6.2% twice. One time is your employee would pay, right? You reduce his total pay, you take the 62% away. The other 62% is the employer's contribution. Same thing as 1.45%, that's a Medicare tax. So the employee will pay 1.45% of their gross, okay, on their own. So their paycheck is, even if you pay them for 1,000, they don't get 1,000, right? They got less than 1,000 because they have to pay the 6.2, 1.45. So what else is reducing their paycheck is the income tax. Am I right? Income tax withholding, it is kind of it is a wild cat because depends on where that cat goes, right? If it is a head of household, and if your employee has 7 other dependent at home, then their income tax withholding could be 0. But it could also be a lot if they have a spouse is already working and themselves is making a decent salary here with you, then yeah, they need to be withheld. So these are the dollars you saw right here. These are the dollars coming into IRS, but collected for Social Security Administration. So this is what we call 941 tax. All right. So now let's go back here. So we have this sole proprietorship single member LLC. I'm the owner. So I work my business. So I say, I hear Ying said that I don't need to run payroll. Of course you don't, because whatever left over, your $1,000 left over equals to payroll. Because you will pay Social Security, Medicare on your 1040. There is a deduction related to the Schedule C. So on Schedule C, you don't exactly pay the full rate, which is what, 15.3? Is that right? Total 15.3%. I don't know. So I'm just gonna write it that way. I think so. So you don't really pay the 15.3 because there is a deduction above the line, but don't drill those little details, because if you really file taxes on your own, the computer already take care of the calculation. You don't need to bother your brain cells to remember that. But just remember what I said here is, if you are sole proprietor and a single member LLC, you don't need to run payroll, because your payroll is already paid at the end of the year on your 1040. But now I am a self, but I am in partnership. When you are in a partnership, okay, that means the partnership has more than one person, right? So we call that partnership. Just depends. Now you say, do I need to pay myself payroll? It depends. You don't have to. And if you don't have to, that just means the K1 you are getting from the partnership, you will pay self-employment tax. So in that case, you don't have to run payroll, right? You paid yourself because you're working. This business is so small, and you are working in the partnership with somebody, and you are getting K1. You pay Social Security, Medicare on your own, so you don't need to run payroll. You're already paying that when you got the K1 and you file your taxes, 1040. All right, but what if you are a S corp and a C corp? Sometimes you can be S corp or C corp, right? In that case, what is the rule? Payroll has to be there. And you can always say that, what do you mean it has to be there, Ying? And I don't really do any payroll, even though I have 1120S. So when you have an S corporation, C corporation, as long as your business is going, and by logic, I don't need IRS to come over here to tell us what we need to do, by logic. And you would have someone to work in there. Am I right? Unless you tell me that your business is so robust and need no human, and you don't really run, and you're actually just receiving royalty fees in your C Corp, S Corp, then of course you don't have a payroll, we understand. But if you are working a real business, you need to have a payroll. You need to have a bodies working in the business. But then this is where you would come in, and in this case, you would come in to pay yourself payroll, and you are an owner, so you will never be a subcontractor. Contractor. Forgot how to spell it. Okay, so now you for sure cannot be a contractor because you're a self. So this is one thing. We talked about self. So there's only three kind of people can be in the business, right? Yourself, your business owner, and or your partner, right? And then it's a contractor and employee. Now you say, well, okay, fine. And so what about contractor? So how am I going to know that these are contractor, not employee? And what's the real benefit having contractor versus employee? Is there any benefit? And I want to say that I don't know whether it's really give you benefit, because the numbers works this way. Let's say if I have someone, I pay $1,000 a month to a contractor. So this $1,000 a month is all the expenses I have in this business, because all I need to know is to run a vendor check. So it goes. I don't need to worry about taxes. I don't need to worry about withholding. I don't need to worry about benefit. And they are not related to me. They just my contractors, right? Like in the CPA firm, and our cleaning, our custodian, and who is working in the firm, and they're contractors. So they can't be employee because all our accountants are employees, right? So that is where you pay, whatever you pay is exactly your business expense. Am I right? But what about employee? If I have a $1,000 paid to an employee a month, and I would add more cost to it. So what I should add, work it with me. So number one, I would add 6.2% Social Security, right? Because the employee pays the other half, so let's not count them. So I only gonna add my employer side, Medicare. I need to add, right? Then because they're employee, I need to add health insurance. And because they're employee, we also have 401k benefit, and we also have pension benefit. Because they're employee, we also give them time off, PTO. And because they're employees, so any business related reimbursement. So if we put these numbers together, oh, of course, don't forget workers' comp. And other long-term, short-term, what is that? Disability. And actually in community CPA's practice, we also buy insurance for employee mistakes, right? Or dishonest act and things like that. So there's insurance, malpractice insurance. So we buy it for every employee. So that's kind of the cost for everybody, right? So add this all up, my dear, add this all up. So my $1,000 expenses now become what? Someone make a guess. And in roughly, in our situation, if I just use this one to compare, and it is $350 extra. So for $1,000, and the community CPA would come up with $350 to match to that. So my real cost is what? $1,350 compared to our contractor, and is only $1,000. So isn't that cheaper? Of course, no brainer, right? So this is where you can, where a lot of business owners are making their decision. They're like, I can go away from here, 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 here. Oh, all of these things I don't need. But even when you have a subcontractor, you want to ask them for workers' comp insurance. You want to ask them for insurance of general liability. You want to ask them for have their own tools and stuff. You want to ask them to sign a W-9 form and a contract to state they are a subcontractor, not employee. That is how important that is to have the contractor defined. Then yes, you could save is right here. So I want this concept to be so clear to you. So you can close your eyes and say, okay, so if I hire someone as a contractor, if it is 1,000, then when I hire them as an employee, it is more. So you may ask me, Ying, you are only talking about, you're here using an example that is way too much because in my business, I don't care about the 401k. I don't care about pension. And I don't even do health insurance. So what is the minimum increase that I need to have in order to have an employee? So that minimum, folks, is 20%. So for every dollar, every $1,000 you pay to a employee, you at least need to be prepared for 1,200 cost. The reason I say that, and I can easily tell you where that comes from, and that 20% is broken down by Social Security amount and the Medicare amount. These two add together is almost 8%, right? The other 12% it is related for employee, is related to employee benefit. I'm not talking about 401k pension, but as an employee, you probably give them day off. So those are percentage of coming in, and the roughly I calculated that would be right around 3% what you pay. So you're gonna accumulate for the day off. When they are having day off, you still pay, right? And then the rest is on workers' comp. Just depends on what kind of work you do. If you're a construction, you probably need 20, you probably need the workers' comp as high as 20%. But if you're an office worker, can be around 3%. So it's really that percentage affecting how much you're adding to the top. So folks, I want you to know that if you have $1,000 you are going to pay to a person, you're wondering that person is an employee or contractor, number one, you are going to determine whether they should be employee or they should be contractor. I don't want you to look at the dollar because obviously employee is more expensive, very simple, right? So, but I want you to know what should be. So let's say it should be an employee, then I want you to budget for 1,200 per pay instead of 1,000 because you do have more expense to come up. This is where there's a lot of struggles and the small business couldn't make it. So they're just wanting to pay $1,000. This person comes around, goes, oh yeah, $1,000 I work, but turn around, your business is closed, your business going downhill or couldn't really pay more. They go to unemployment insurance, asking for unemployment benefit. At that time, what do? You know, I want you to understand that when they go to apply for unemployment, the government not going to tell your contractor that you're wrong, you're an employee. They are not. They automatically come to you, have you determine exactly how you are treating that person. So your behavior control, your financial control, your relationship is all coming in as a play. So you may answer those questions wrong. You may think it is wrong in terms of answering that question. For example, you know, we had a situation where the answer for one of the questions is related to financial control. So do you reimburse, like when this person you hired, and when they have expenses coming up, do you reimburse or you actually do not reimburse? What is the right answer if it is your employee or maybe it is your contractor? So let me rephrase this question. I think I'm maybe not saying it very clear. So let's say Ying is your contractor and you want to keep me on the contractor status when the workforce coming in to audit you. So the auditor asks you, okay, when Ying has expenses, do you reimburse her? And you may think that, oh yeah, she's my contractor. Of course I reimburse everything she's asking. So that is just, you know, she's my contractor. So of course I pay because she's not my employee. So I pay. You're wrong. Because one, I'm your contractor already. When I have expenses, you don't reimburse me. I make an invoice, you pay me. If you use the word of reimburse, that is reimbursing business expense incurred by employee on personal account, like employees' mileage. You reimburse. They are your employee. But if they're your contractor, you don't reimburse nothing. You go by contract. So those are areas that if you don't really understand, it is so easy to set your own trap. Am I right? So it is really important when you get into the audit and you understand the question. I'm not talking about make sure you read English. It is far beyond just reading the English, you need to understand the government, the rules, understand those controls, understand each state requirement. Then you can answer your question. And if you haven't really done that study and you just want to get into the audit and make a good friend with the auditor and you think you can get away from that, just don't kidding yourself. And then there is no auditor will be your friend, and I will tell you. And they might be a good person, deserve to be your friend, but you met in the circumstance of working together. And his work, her work is to make sure government rules are properly implemented. You work on your side to make sure your business can survive. You're not on the same page. You will never speak the same language, and just don't be naive. And our small business owner sometimes is very cute, very naive. And they think that if they do something, or even if they cry and the things would get better. No, it's just crying babies doesn't necessarily get more milk under this circumstance, right? So it just really need to understand the rules. And I felt like I'm giving you some good understanding of why you wanted to be contractor from money standpoint, and why employee cost from looking at what you're gonna provide to the employee. You may say that, Ying, you're excessive. Why do you have to make such a long list? We don't even have to have that. Are you kidding me? Nowadays, the requirement, the expectation of employees are so different than what we knew 20 years ago. If you tell all of these conditions is excessive, then you are outdated. And right now, these benefits I have listed here, very common. It's almost a must. It is not a decoration. It is a thing you need to budget. If you really want to run a serious business, a successful business, you will have teams that committed to help you. You got to eliminate all of these worries they have in their life. You got to plan their retirement. You got to take care of their health. You have to dental, vision, whatever health you can talking about, mental health, and all the health need to be taken care of. You want them to have Social Security, Medicare, so they can retire comfortably. You want to give them PTO so they can enjoy life rather than just working. And you want to reimburse everything they can think of so they felt like they're not really eating up their own salaries to help the business owner to do more business. I mean, talk about expectation. That is what happens. So that is the cost. 35%, 20 to 35% over every dollars. That's the expense we're talking about. All right. So with that, now let's continue to draw a couple of more lines because I want to walk with you to figure out, okay, now we understand why contractor employees are this way, and then tell me what the government do. So the government would come in to audit your business, right? So they are auditing. They use audit, they use the word of audit, they use investigation, and they use compliance review. It's all the same. It's not exactly the same. The procedural is a little different, but they're looking at your books. Okay, so now let's just kind of disseminating with these governments, all these governments, and in our introduction to this webinar, we said that one business can be audited. One business, okay, this is business. This is one business can be audited at the same time by the same thing, which is auditing contractor issue, by all of these entities. So number one, IRS. Number two, state unemployment. And then number three, DOL, Department of Labor. And number four, work comp. And work comp is actually comes in annually. If you have a business, you have a worker, they come to charge you annually for workers' comp audit. When they do audit, they ask you for all your W-2s plus your 1099. Why? Because they want to make sure, and you even cover 1099, even if they are contractor, because they deny that contractor is not employee. They automatically nowadays include 1099 to W-2 and calculate your liabilities. If you really want them to separate that out, you need to prove to them they are contractor. And by proving means that they have their own insurance. They have their own workers' comp insurance. All right. Now, why is DOL has anything to do with that? They do, because the audit they have or the investigation they have, it is about knowing whether people who works in your place are treated properly, right? With that being the goal, they can go to your restaurant or go to your business place and tally up all the people's name. They know who works there. And if you have people who are not employee and a contractor and is there, and they will consider that to be an employee. And like the earlier story I was telling you, the only reason we can, we actually was able to move the janitors out of the employee pool because the business is not in the janitorial business. So that is a contracted work. And so that made it possible to not be a contractor, right? Then you say the state unemployment, of course, majority of the state unemployment audit coming to you as a business is because you have disgruntled employee and who probably disgruntled contractor who knows they are contractor or didn't think they're contractor. They would go to unemployment benefit, goes, well, yeah, I lost my contract, but however, I'm really treated as an employee because they supervise me. I have to go to their office and I actually, could never work at home and I use their computer and, all of these is such a strong support of that person to be employee, not contractor. Then your state UI will assess you. And do you know that they have no time limitation? They could go as far as 10 years before. Okay, so that is the state unemployment. Mostly are coming out because of the claim they received from your contractor. Okay, then IRS also do audit. IRS does employment tax audit because you are running a couple $1 million business, but you have no employee. All of your people are contractor? No way. So that's why they're here. So IRS will look at your contractor and employee, and I will show you a slide because I prepared that. I want to show you exactly what it looked like when IRS audit you on the contractor and the employee. So now get this picture. So we talked about as a business and the people, the real humans inside of the business are just these three kind of people. Okay, this is related to working. Of course, there's other kind of people like your vendors and your investors. They're also people in the business, but I am just talking about the three kind of people would have something to do with the Social Security Medicare payment, like the 941 tax, right? So when you are self, we talked about in what case you don't need to run payroll, but you are in fact by what was that fancy legal term? I don't know. That's why I'm not a lawyer. They, like by definition, by default, you are a employee because you pay whatever you have at the end to Social Security Medicare. You pay those taxes, right? But if you are in the corporation and you are the only one works in the corporation, absolutely you are an employee. So S Corp, C Corp, same thing, right? But also you may not be a self. Maybe the business has contractor and an employee and not yourself, you hire them. then you would have a issue right there. You need to make a determination. And we have clients are doing massive payrolls for the people they identified. So this is actually a trend right now in the industry, and in the payroll side of things. There's a big company up there, they need 40 people to work. They couldn't find them. Then they contact the community, say they contact the representative from Hispanic community, and they say that you be my agent, I'll get all 40 people from you. So that agency, folks, and let me just draw that chart here. So this is the large company, and the wanting employees, they want 40 employees. So they go to you, they say, hey, set up a company here for me. So you give me, you supply my people, I pay you. So there is a business relationship between you and your company and to this large company, right? But how are you finding those 40 people? Are they contractors or employees? Let me tell you, if you are in this particular setting, you are getting one big check for 100K to pay for 40 employees for a month. And you come over here, you treat these people as 1099. You are wrong. You need to run payroll, folks, okay? Because you are having them to work. You are a job agency. Everybody is a job agency person to go out to serve other clients. So the classification, they're doing the same work. It doesn't matter manufacturing, restaurant, or what, agriculture, it doesn't matter, because they're your employee and their purpose is to go somewhere else to make money for the company as a employee to other people. But this company A will never pay Social Security, Medicare. They got away from all that compliance. They send you a vendor check. They give you, and then you need to pay Social Security, Medicare. You need to face all of these audits we're talking about. Okay, no kidding, folks. And I don't want you to think that you got a big business. We already have so many, I already come through so many cases with this kind of setup. Very clever. The big company knows how to rip up a small company, but as you are a small company, you have us. We can advise you what to do, what not to do. But please do not run them as 1099. You do not have a case to win at all. Okay, so now let me just go ahead show you the PowerPoint I prepared, because I just want to go through that really quickly with you on a couple of things. And I think you're looking at my slide. I want you to look at this one. And then this is a slide. This is a section of audit that one of the client come across. They are a construction company, and they had issued 1099 for $527,770. And they, of course, issued their own payroll check for $62,000. This is the owner, but the rest of the worker, they're all 1099. IRS come around, assessed the worker reclassification, and made everybody employee. So what happens when that happens? Look at this. So they are calculating taxes, right? So this 527,000, they're calculating Social Security, Medicare, total Social Security, Medicare, and then that total Social Security, Medicare, it is on both employer-employee, because you didn't withhold, employee not gonna pay, so you pay for them. Then they calculate federal unemployment that you're supposed to do on 940. They calculate income tax withholding. This income tax withholding was luckily a smaller number. Okay, otherwise you have to withhold 20%, right? Imagine if it is 20%, we're having $100,000 here. But these withholding would not go anywhere, because this is 2018. The workers are not even there anymore. So it's really just gonna be money you pay. And look at this business owner. He ended up has to pay $115,892.87 on penalty and taxes. And of course, he didn't pay that. When he was running 527,770, it was just 1099 goes out. But then he ended up coming back with 115, folks. 115 divided by 527. And so he's paying 22%. 22% extra for what he paid out. Do you remember on the whiteboard, I was telling you that it's 20% to 35%. Am I right? So if you knew that you're going to be audited this way, why are you just go ahead and do payroll properly? And at least you save our service fee, right? Otherwise, you go through so much stress. And it is, I'll tell you that this is a very, very good, this is an auditor that really understands business. This is the auditor has a lot of compassion and knows how business runs and understand business owners' hardship and knows how to use proper code, proper regulation to reduce the income tax withholding. But you can come through an auditor that don't have that knowledge, would not be able to do that for you. And thinking that you made too much money that you should pay taxes. So all of these things, it is so much stress. So folks, I want to say that when we talk about taxes, on one hand, we want to pay it right. I do not want to see any of my clients wasting their money on taxes they should not pay. But I also wish all of the people out there to know that to pay it right. And the payroll and the subcontractor or contractors are such a big deal right now, folks. And you don't want to play with fire. Just do the right thing. If you have people working for you, most likely for small business, I will tell you, because you are small, most likely they are employees. And you don't want to classify them from get-go to be a contractor, even though that person goes, no, I don't want to get W-2. You know, I have all these things that I want to claim and I don't want W-2. You don't, you know, as much as we know how hard the labor market is and how hard to find employee, and doing the right thing will never get you to the wrong place. Maybe in the short term and make you stressed, but I'll tell you, it is worth a long run. If your business is a long run, it's worth a long run to do it right from very beginning. And you know, we are here, we really can help you. And the one last thing I want to say to you, okay, now you say, okay, I will do payroll. Okay, that wasn't even my purpose for this session, but you might need to do payroll. You can do it yourself. There's so many things you can use to help, right? But I want to give you a difference between the large company like ADP Paychecks versus the small company like Community CPA, how we do payroll. And if you are struggling with cash flow, 1 month you have good money, 1 month you don't have good money, you never should go to the large company, because they are, the way they're running you regularly. If you have plenty of cash flow and your payroll goes regularly, that's a good candidate, you can go. But if you have a lot of issues and today you have a new employee, tomorrow you have another new one, the other two quit, and if you have all of these turnovers, all of these issues with the employee, small business owners, your best bet is to find the local small CPA firms to do your payroll, like Community CPA. Okay, and then the other thing is that small CPA firms payroll fee is not necessarily higher than the large company, but the large company has a one way to make money. I want you to understand, when you work with the small CPA firms, your tax due day is the day that we submit your payment. So maybe you are a quarterly filer because you are small, so you don't have to pay money right away. You wait until July 15 to pay the second quarter. But if you do it with large companies like ADP, they take all of your payroll taxes immediately. So they have that money with them to invest, to make money, to make interest. That's not yours. So it is, sure, they took your money out. If you're short of cash flow, you know what that means. That just means you struggle, but you can't get to that cash. That cash may enable you to run more business, to do more, to earn more revenue. Okay, so that is a big difference. So you know, some people, you know, we have clients come over to us, goes, well, why are you not taking my money? And I used to, you know, the other company was taking my money every time I run payroll. And I tell our client that's the big difference between big payroll company versus small. The big payroll company, they all have an investing arm. They use your money to invest. So they make money, they're able to lower their fee. But your real small CPA firms, they just gonna pay taxes when you need to pay. They won't pay it early for you. So this is a really certainly good or bad, and I just want you to understand it. Then of course, if you are so concerned with your with having all these cash going out too quickly, then you should look at a different way to run your payroll. So I want to add this slide here just because I know I had a lot of questions related. Okay, Ying, your company charges the same fee as the other company, but what's the really difference? The real difference is actually on the funds, how early they go out, and the other difference is on the actual connection. So you should be connected to the people you can actually know where they are, instead of some 1-800 number that you just don't even know who you work with. I would still say that your business is so small, you need someone to really babysit you. And it's not like you're a baby. Of course you are not, but we enjoy babysitting, with crying babies, and we have a way to keep them quiet. I'm just kidding. But you know what you need. So I hope that this webinar really gives you that understanding. All right, I need to conclude. We're at minutes over, and please email Catherine at communitycpa.com, and our phone number is right there, 515-288-3188, and we do open 6 days a week. So that's what's the difference between Community CPA to other CPA firm. We know you work on Saturday, so we do too. All right, I'll talk to you again, and thank you for being with me at this webinar. Bye-bye.